Hey, how's it going? Hope everyone's doing fine. So this is the only video that you need to watch if you want to make your first investment, and if you have not started yet, considering the current market scenario, I highly encourage that you start doing it. So if you have just started earning or you have some savings in your hands and you have not made any investment yet, this is the perfect video for you. Now this video will be divided into 4 sections. Why this is the right time to invest, what you should keep in mind when you're investing in a market like this, where should you invest, and how can you invest. Right, so starting off with the first section, Nifty 50, one of the major stock index in India, this is where it was during COVID in June 2020, and it clearly enjoyed an upwards run for 1.5 years. But from October 2021 onwards, its path started getting volatile, and as of now, it's down by almost around 12% since that all-time high. Now this phase is quite normal in the stock market and is known as a correction, which means after getting pumped up due to various factors, the stock market eventually lapses and it starts correcting itself. That is, it starts coming down. And this is precisely the reason why you should start your investments at this point, because you will be reducing your cost of investment if you're able to enter now compared to if you had, for example, entered when it was near 60,000. So this is one of the very good times for you to get started in the stock market. Now the market is down and volatile, and when you're investing in a situation like this, one thing you should always keep in mind is your investment horizon. So if you're investing now, keep in mind that do not do it for the short term. Your minimum investment duration should be for at least 4 to 5 years, because the volatility has started and we never know how long it might continue or whether the market might even go down. Because considering the global scenario that we are in currently, the Ukraine-Russian war and the probable US recession that might come up, all these factors might not be good when it comes to the Indian stock market. But when you look at a bigger picture, that is for a period of maybe 7, 8 or 10 years, this is an excellent time for you to enter the market. And secondly, do not invest a lump sum amount all at once. I would encourage you to go ahead and do SIPs, that is systematic investment plans. So invest a particular amount every month, because we never know where the market might go. It might go down even further, and if it does, you would want to stay invested during those times as well. So go for SIPs rather than investing a lump sum amount at once. And thirdly, I would say diversify, because considering the volatility of the stock market currently, it's better not just to invest in equities, but have your investments in other areas as well. For example, invest in debt mutual funds, or even include asset classes like gold in your portfolio, because those might help to balance out or minimize any negative losses that you might have from the stock market. Now, when it comes to choosing where to invest, like we all know we have to invest in the stock market, but where exactly? So I feel this is the area where majority of the people get stuck, and this is a factor which acts as a very big friction between someone actually willing to invest but then going ahead and actually doing it. So let's keep it really simple. These are the 3 areas which I would suggest for you to go ahead and start with. They are really basic and they are really simple, and if you just do it in those areas for a long period, you would get very good returns out of them. So starting off, first we have index mutual funds. Now you must have heard me talking about this before. These are funds which replicate the return that is generated by a particular index. So it could be Nifty 50, or it could be Sensex, or it could be Nifty Bank, or any indexes. It just replicates the return that this particular index would give you for a period. So for example, if I say it's expected that Nifty 50 would be giving you an annual return of around 12% for the next 7 to 8 years, if you invest in any index mutual fund, you would typically be looking to get that kind of returns out of that fund. They are comparatively less risky when compared to other types of funds, and also the expense ratio, that is the commission that you pay to a particular mutual fund company for managing that fund, is also very low when it comes to index mutual funds. So this is a perfect place for you to start with. Number 2, we have balanced advantage funds. Now this is another type of mutual fund. So what this fund does is it's dynamic in nature, so it's a combination of equity and debt. So depending on the market, it fluctuates between equity and debt. Now I've made a detailed video regarding balanced advantage funds, so if you want to know more about it, you can go ahead and check that here. I'll also provide a link in the description below. And the third type that I would suggest is investing in a particular small case called all-weather investing. Now if you aren't aware about as to what a small case is, again I have also made a detailed video regarding that. Link is here or in the description. You can check that one out. So in brief, all-weather investing, it invests in 3 types of asset classes. First we have gold, then we have the index, and third in debt. So it oscillates between these three types, so it's a perfect balance. Diversification is something that is very well taken care of in all weather investing, and hence this is a perfect place for you to start with, considering the current market scenario. Now, I talked about index mutual funds and balanced advantage funds, but if you search balanced advantage funds, you would get various types, so again you get confused there. I would suggest do not overthink this much. Just go and search balanced advantage funds in India. There are numerous websites which would come up, and you can just pick the top ones which are suggested there. There won't be much of a difference. The website that I personally use is ET Money. You can go there and you can see the ranking what ET Money has given. If you want, you can get more information about that particular fund or the particular company that manages that fund. Again, I'm telling you, do not overthink this. Now, if you want, you can go ahead and obviously do that. It's always better to do your research, and in any case, I do not suggest you to go ahead and blindly invest in anything that I am suggesting. Always do your research, but do not do it to an extent where it feels like, okay, I have to spend a lot of time in this, and you do not invest at all thinking that, okay, who will do all this research and stuff, I do not have time. So what I'm trying to say is, when you're starting an SIP in an index mutual fund, there is not much research from your side that you need to do. Just pick one fund like I suggested on Google, like I do it from ET Money or any website you can do it, and just start investing in that. Like I said, you ideally want to minimize the friction between you willing to invest and you actually going ahead and doing it. So keep it simple and keep it quick. So now that we have talked about the why, what and where, let's go ahead and talk about as to how you can actually make these investments. Again, that's quite simple. Just go to any of the discount brokers. For example, we have Zerodha, we have Grove, we have Paytm Money, etc. in India. These are the major ones. You can go to any of these and you can register yourself and you can start an SIP. If you are using smartphones and any applications, which I'm sure you are, you can easily go ahead and register in any of these platforms. They are really easy. The steps mentioned are self-explanatory, and without any help you can go ahead and do that. And even if you want some help, you can search on YouTube as to, say, for example, how you can register on Zerodha or how you can create an account in Paytm Money. You'll get videos and you can follow that, but still, nevertheless, you can easily go ahead and do that yourself. And if you want to know about the background process as to who is Zerodha or what happens when you are starting an SIP in Zerodha, I have made a separate video regarding that as well. It will give you a very good concept as to what happens behind the scenes when you start an investment. I'd recommend you go ahead and watch that first, or even if you don't, it's fine. You can do that even after you start your investments. So that was it for this video. If you want to check out a method of investing known as the co-satellite approach, you can go ahead and click here. And if you want to check out and know as to why you should invest in gold, you can go ahead and click here. That was it for this video, and until the next one, take care, see you, and bye-bye.